Jim, thanks for joining us today.
Happy to be here.
What are you seeing in the M&A market now?
I think the last half of 2014, certainly in the middle market M&A, sponsor-backed deals have really escalated from a somewhat slow start of the year to a real strong finish. If you just look at the number of deals that are occurring, I still think that big deals are getting tough to do. I think somebody told me the top 16 deals that were announced this year still haven't gotten done yet. But I think that in the middle market is showing real signs of strength.
Any sectors in particular that have done really well this year in middle market private equity and M&A?
I think it's been across the board. Certainly software, life sciences, business process outsourcing have all been good. Everybody loves manufacturing because it's stable and a good cash flow and the like, but they tend to be harder to do. But in some of the more service businesses and software, they seem to be very active and pretty easily financed these days.
And what are we seeing internationally? Are we seeing U.S. companies look overseas, European companies coming here?
Actually, I think that it's really the opposite internationally. I mean, Europe is really been slow. While I think M&A activity has generally been around 7% of GDP and is about that here, I think it's a little off that in Europe, as is their GDP growth. So the growth of deals in Europe has been a lot softer than it's been here.
And what's the outlook for 2015?
I wish I could be predicting and I could bet all my money on it, but I think that it seems to be ending strong, and I think when it ends strong, it generally starts strong, and I would expect a middle market to continue to be strong, and I think that some of these 16 deals that were announced need to start closing, and when they start closing, I think it's not far behind. I think that private equity has pretty much solved the increased scrutiny of bank debt, where the Fed is really looking at and being very critical of any covenant light, more than 6x, 6 times EBITDA financing. I think that alternative capital sources and direct placement with investors is substituting some of that restriction.